What's up, guys? I'm Dave, the Military Millionaire. I help service members, veterans, and their families learn how to build wealth through real estate investing, entrepreneurship, personal finance. If you're new here, make sure you like and subscribe if that sounds right up your alley. We are the largest military real estate investing platform in the world, and we have helped a ton of service members get started on their journey and progress from there. And we do so in a very genuine way, without a whole lot of pushy, salesy stuff. I mean, don't get me wrong, there are definitely things you can buy from me, and there are a mastermind group that you can become a part of, but I try to give you as much value and answer as many questions as humanly possible in this platform via Facebook group, YouTube, just free content. So today we're going to talk through how to buy your first rental property. And really, it's not as complicated as you might think. There are a lot of different things that you can think through, but realistically, the process is pretty straightforward. Find a deal, write an offer, let the agent and the lender hold your hands through the entire process. As long as you have a decent agent and lender, you'll be golden. Get to the end, close, own your property, hand it over to a property manager if you want it to be really simple, and then bada bing, bada boom, you got a rental property. Now, that's oversimplified, right? So the first thing you're gonna wanna do is you're gonna wanna make sure your personal finances and credit score are in check, right? Because if you don't have good credit and you don't have good personal finances, then you probably don't need to be buying real estate right now. Like, you don't want to put every penny you have into a down payment and have no reserves. You've got to have some money in reserve because, well, prime example, I just renovated the house. We actually went pretty far over budget, but luckily we had underwrote for enough issues that when we refinanced, there was enough in the budget to basically break even on what I pulled out, right? So what's called the BRRRR method. You buy it, you rehab it, you refinance it, you rent it out. So we did this, and I thought about selling it, and I thought about holding it as a rental. I like the location, so I decided to hold it as a rental. And kid you not, we move a tenant in, 2 weeks later, something goes wrong with the sewer. It's the line from the city to the house. We'd done $12,000 worth of plumbing work, but this is the main line, something totally different. And after everything's said and done with the easement, because we were able to get an easement instead of the full scope and all this other stuff, we lucked out. It's still gonna cost like $8,000. Right now, that is a one-off. I've bought a lot of real estate. I've never had that happen before, but that's why you need cash reserves, because if that was the only money I had, well, now I just lost a tenant, had to give their deposit back, and I don't have cash to fix this thing. This house is gonna sit here while I pay the mortgage for months trying to find the money to fix it. But I had the money to fix it, so not the end of the world. Similarly, you could buy a house and have the HVAC go out. Buy a house and have the refrigerator go out. Buy a house and have I don't even know, furnace. I mean, there's all kinds of things that can go wrong. So you want to make sure your finances are in order and that you have some cash on standby. Now, how much cash is going to depend on a lot of things, but I think if you have $10,000 sitting in cash reserves, that's probably a good starting point. And then I would make sure that you're budgeting for CapEx, capital expenditures, throughout, and repairs throughout your ownership. So always be taking, like, I would say around 14 to 15%, but 10 to 15% of your gross income, and put it into that cash reserves fund so that when the roof needs to be replaced, you've been budgeting and setting aside money for it. And the nice thing is, like, you don't necessarily, that percentage is gonna be different on market, right? So on a very expensive house, like $1 million house in San Diego, the roof is not 10 times more than a $100,000 house, the same square footage in Missouri. It might be a little bit more because of labor costs and stuff, but it's not gonna be 10 times more. So while it might bring in 5 to 10 times as much rent, so you probably can get away with a smaller percentage of that, but know your market, right? That's more advanced stuff. Personal finances, cash reserves, decent credit. Get all that stuff in check. If you have questions about all that, I've got videos that walk through budgeting, personal finance, paying yourself first, improving your credit score, working on your debt to income ratio, all of those things. Now you're gonna wanna find a deal. So what you should do is you should go network with all the wholesalers in town, and you should go talk to all the investor groups in town, and you should find a good agent. So a good agent, really just somebody who's communicative and hardworking, but ideally somebody who does some investing themselves and is very familiar with the market. Good way to find that, local Facebook groups, real estate investor associations, or RIAs. Pick their brain, right? What agents do you guys use? What wholesalers do you guys have? Like, look through there. There's probably some wholesalers doing some deals. You can go to Google and type in "sell my house fast this town," and you'll see all the wholesalers pop up. Go to their website and ask to be added to their buyers list. This will start getting you some deals. If it's from a wholesaler, it's going to come straight to you, no agent, no commission. You might get a better deal, but you also need to make sure you actually know what you're doing with underwriting and analyzing, because it's a lot more on you. So I don't know that I would recommend going off market for your first purchase. I would probably go through an agent so that you learn the process, though I definitely prefer off market to working through an agent and lender whenever applicable, now that I have some experience. Get with that agent, get them, tell them what you're looking for, and have them set you up on an automatic drip so that anytime something pops up in the market, you're getting those emails. I still to this day get emails about duplexes, triplexes, and fourplexes from an agent I used 4 or 5 years ago, because I was set up on that drip, and I'm not gonna turn it off because I like to see when those properties come up. So you get the agent, they start sending you stuff, they're gonna take you through some properties, help you find some deals, hopefully they know what they're doing. A good agent is worth their weight in gold and absolutely earns that commission, especially since as the buyer, you don't pay that commission, the seller does, so it's a win-win-win. Go start looking for deals. In this process, you should probably talk to a few lenders to see about what kind of terms you qualify for and getting pre-approved. Now, if you're doing like a VA loan and like a house hack, that's a totally different concept. I love that option. So if you are doing that, like you buy a fourplex, you live in one, rent the other 3, like lending criteria is gonna be a little bit different, get pre-approved, but you can get in for 0 down. But most lenders on the conventional, like commercial investor side are gonna be anywhere from 15 to 30% down that they want, right? Generally, it's like 25. I would say it's probably most common to be 25, then probably 20, then probably 30, and then 15 is probably the least common of those 4. Now, don't get me wrong, there are other spreads and other down payment options, but those are just the most common. So let's say you budget for 25% down. Go talk to 3, 4, 5 local community banks, right? These are branches. They have 1 to 5 branches. They have, $500,000 or less in assets under management. I don't know if that's as important of a number, but 1 to 5 branches. And ideally, they're a portfolio lender. So go find these guys who can hold the loans in-house, because they'll be more flexible and they don't have to succumb to federal guidelines or third-party mortgages, people who are buying the note from that bank, which is what happens a lot with bigger banks. And with the smaller bank, as you build your portfolio, you're going to make up a higher percentage of that bank's overall wealth. And so they're going to be able to work with you more. They're going to know you personally. Like my lender can give me a pre-approval off a phone call without any finances, right? And he's like, we'll figure it out later. And I haven't been disapproved for a loan yet. So knock on wood. Go work with that lender, get pre-approved. Some markets you're gonna have to be pre-approved to write the offer. Some markets they don't give a shit as long as you can get pre-approved and buy the property, right? Start looking at properties. Walk through, you need to know what you want. So you need to set criteria. Have a buy box set up and know, hey, I am looking for single family, 2 ones that are 1,500 square foot, so that you can put a 3rd bedroom and a 2nd bath in there and whatever. Or I'm looking for 3-2 cookie cutter vinyl village homes in this neighborhood, in this zip code, right? You need to know exactly what that criteria is that you are looking for. Yes, the stricter your criteria, the harder it is to find those deals. No, that doesn't mean it's a bad idea, because buying fewer really good deals is often better than buying more not so good deals, right? Makes sense, right? Like, would you rather have one $100 steak or 100 packs of ramen noodles? Probably rather have the steak, assuming, of course, that you're still going to get to eat in both scenarios. Otherwise, maybe go with the ramen so you don't starve after you eat the one steak. But eat half the steak and trade it for 50 ramen noodles with the other guy. Aha. All right, so start looking at these properties. Start making offers. Make offers that don't worry about what the price anchor. Don't worry about the list price. Worry about your numbers. So set up your criteria for what you're looking for, how much you're willing to pay, how much those properties rent for, boom. Write the offer based on your criteria. I would say give yourself a buffer, so offer $5,000, $10,000, $15,000, $20,000 less than what your max offer is, and so you have some wiggle room in there for negotiations. If, however, it's a really hot market and your number works with their list price, just offer them full list price. It's not the end of the world. You don't have to negotiate in order for it to be a good deal if it meets your criteria. If it doesn't meet your criteria, then write them an offer that does meet your criteria. They might laugh at you. They might say no. They might counter, they might say yes. You have no idea. So just, get out there and make those offers. And a lot of times if you're writing a lot of offers and they're low, pick up the phone or have your agent pick up the phone and just call and say, hey, we're thinking we're going to come in at this price. Is that worth submitting? And the agent on the other end will be like, oh yeah, maybe, or oh no, we have 20 offers, pound sand. So now you've got this thing under contract, right? Someone said yes. What next? Well, you kind of just sit back and relax. I mean, realistically, like, you do your due diligence. So you need to do the inspection, which your agent will schedule and walk you through if they're worth their weight. You do your appraisal, which your lender will schedule for you and handle, because that's what they do. That's their job. You're not actually supposed to talk to the appraiser. It's supposed to go through the bank and be third party, anonymous, whatever. Your agent probably has a recommendation for an insurance company, or ask some local people, or go through State Farm. I don't know. Just go talk to somebody about insurance on the property. Make sure that that's set up to go through on closing day, and make sure that you had analyzed that in your numbers and that it is around or less than what you had budgeted for. Call city utilities and make sure that utilities are set up to transfer to your name on closing day, especially in the winter somewhere cold. The last thing you want is utilities to get shut off and you freeze a pipe. Been there, done that, not fun. Although in my case, it wasn't utilities shut off. It was really angry inherited tenant ripped all the copper wiring out of the house, and so no power equals no heat. So that was fun. Still dealing with that. Yeah, so these are the basic things, right? Your agent and lender are going to be able to walk you through the entire process. The lender is going to say, hey, I need this, hey, I need this, hey, I need this, and they're going to hound you for all these documents. It gets better. The first time you buy a house, your personal financial statement, 2 years tax returns, W-2, and all this other crap, and they run your credit and all these other things. As you buy more and more houses, it'll eventually get to the point where they're like, cool, we know you're good, depending on your lender, right, and the type of loan. But with a good local portfolio lender, it'll be more like that, because they know you personally, they understand where you're coming from, they understand your finances, and they'll be able to underwrite you based on the rest of your portfolio covering that note, even without looking at your finances, if your portfolio is doing well, and you're making your payments and yada yada, doing the right things. Your agent will walk you through the inspections and the renegotiations based on inspection report and closing and what you need to bring, and your title company will reach out and get you. I mean, their job is to get you across the finish line. So it's really not that complicated. Don't overthink it. They will help you out, right? Again, assuming you found the right people, they'll make this very easy. You close on the property. During this time, the one thing you do need to be considering really is whether you're going to manage the property yourself or hire a property manager. If you're hiring a property manager, start on those interviews when you're looking for houses, right? Find it, and I've got videos on how to hire a property manager that go into detail, but find a good property manager, reputable property manager who's not gouging you out the rear on their percentage of take and on additional fees and half rents and all this other crap, right? So talk to some other investors in the area, see who they like. Personally, I am a huge fan of property managers, but there are some downsides. They're not all created equal, so self-managing has its perks. You will make more money. It's not the end of the world. Just make sure that if you're going to do that, you have the right personality for that, you're detail-oriented, you're okay with confrontation, you understand the rules, and you're going to be ethical and moral, and you can handle the stress of having to deal with tenants and all their ridiculous requests and evictions and whatever, right? So make that decision, act accordingly, get yourself set up accordingly, close on the property. If you had a tenant that was inherited and they're on a lease, let them get to the end of the lease, and then I would recommend you screen them per your personal guidelines as far as tenants to see if they're actually qualified to be your tenant, and if not, get rid of them, even if they've been paying, right? Because most of my big problems have come from inherited tenants. And then on the other hand, if there is no tenant, just go ahead and start marketing the place for rent, advertising the place for rent. And if there's a tenant and they don't have a lease, then screen them accordingly, give them the 30-day notice if they don't meet your requirement, let them move out and rent to someone else, right? Because again, inherited tenants have a higher track record of not being ideal, especially if the place was run by like a mom and pop who wasn't professionally screening people. You don't want to inherit a tenant that has the potential to be a very big burden, right? So that's the buying of the rental property. And then you rinse and repeat as you build more income, and eventually you get to the point where maybe you have some investors or you have enough recurring income that you can buy more frequently, and you scale up from there. So hope this helps. This is a pretty simple breakdown. I don't think I missed anything. Actually, I'm gonna get unprofessional, break character for 2 seconds, look at my notes here, and see. So I hit the wickets. We got it all. The only thing that I wrote on here is double, triple, and quadruple check everything and all your numbers and your due diligence. I think I hit that nail on the head, but if not, yeah, definitely double, triple check. Make sure your numbers are right. Either way, have a great day. Make sure you subscribe, like, and share this if you got something out of it. Peace. Thanks for watching. You've made it to the end of the video. If you got something valuable out of this, please consider smashing that like button, subscribing to the channel, and checking the little bell for notifications so that you get to see more valuable content. Depending on what you're interested in, we've got a ton of other playlists on real estate investing, military advice, getting rich in the military, VA loans, you name it. And make sure you get plugged in the community, in the Facebook group, and other platforms. Also, if you haven't done so yet and you've still got a lot of questions, especially if you're a younger service member, check out the No BS Guide to Military Life. This is everything I wish I'd known when I first joined the military, and I wrote it to pass on so that other people don't have to say, God, I wish someone had told me that when I was younger. So hope you got something out of this. If you got ideas for other videos or questions, throw them in the comments. I definitely do reply to most everything that's in my comments, and I look forward to seeing you around the channel again. Have a great day.